up for you hopefully by the end of the day or tomorrow. So the following Q&A webinar today is purely for educational purposes. Any stocks, options, futures, ETFs mentioned does not constitute advice and should not be construed as a recommendation. So, the markets have had a bounce back. You can see, we basically came down to major support here yesterday, that 21 on the S&P, and, bounced off of it, kind of holding up here with the NASDAQ as well, came down to that 21 right in here. And so kind of getting a bounce. So far just kind of steady as she goes as far as the market. So the one setup that we have here currently is the Visa, and let's take a look at that. It's holding right on that 618, which is kind of a key level. So as long as it can hold right here, this is where we want it to be. Keep building that kind of support here at around this 140, and then we have a potential to push it back up to that prior high. So 143, and we did a trade setup on this yesterday, the 141, 143 call debit spread. So set that up, and then I was watching this key level here. If that starts to break, then I probably want to convert this to a condor or something like that to bring in some credit against it. So that was a potential defensive type of adjustment if that was to happen. But it's holding in there, so as long as it holds, just hang with it if you're into this trade setup. So this is the 31 August, 141, 143 call debit spread. And was looking at if it started to break down below this 140 level, would sell that 144, probably 146, or you could sell 143, 45 as a butterfly just to neutralize that risk if you wanted to do that. So that's a look there. We set up Friday in the room. We set up a SPX bear call credit spread, and getting a little bit of a pop back here on that today. Let's take a look here. Let me pull that up. So you can see it's come down, holding that 21. And we've got expiration on Friday for the monthly. There's some pretty decent open interest down here at 2,800. We can look at that to kind of get an idea of where this might go. So established a credit spread here that sold the 2880, bought the 2885, and did that with the 29 August series. So yesterday this got down to about 60-cent credit, and today it's back at 85. So the key is to see if it holds. If you're uncomfortable with this, you could just close it out here for a tiny profit and going down the road. Now kind of the major key defensive line in the sand here is this, let me get that price, is this price here, the 2865, you can see right there. So that's got kind of like 3 strikes before the short strike at 2880. You never want to let a out of the money credit spread get into the short strike. So that would be the area. Or, you could close it here for a small profit and go on down the road. But the reason for this trade was based on this reversal signal here, which has a reversal with negative momentum cycle 1 and 2 down. Now we've got 2 just pop back up here today. So And if it holds in here, it probably could easily go back up to 28.65. So it might be one that we didn't get that momentum fall through, close it out, and go on to the next trade. So make that decision if you're interested in that. Let's take a look here. Yeah, I want to look at the open interest for SPY. That'll give us some hints as well. So let's pull up SPY. So any questions on that? It's at a point here where it's a small profit. So you again, either hang with it or close it out. We didn't get that big fall through, but when we look at SPY, let's take a look at the monthly option chain here, which is this week's expiration. Got the August 17 series. You see the currently right here at 283. There's nothing too huge. The biggest amount of accumulative open interest is at the 280 strike here. So that still could potentially happen, but as long as it's sitting here, not breaking that 21, looks pretty decent there. But you can see then another big area would be the 285, which is also within the expected range. Okay, so that has 140,000, and the 280 has by far the most. It has 40,000 right here. So it's kind of a toss-up, really. And then you've got the 282, so it could go either way, really. So if this thing does then start breaking the 21, I'd probably look then to sell buy a put spread. But so this will be the key thing to watch the rest of this week, will be this level. So I think probably just close out that credit spread if you've got that on. You could wait till the afternoon to see if this thing holds here or sells off. Probably be the way to do it. Let's take a look here. Pretty good recovery here on the Russell, and you've got that squeeze. It looks like it's probably maybe going to head towards that trigger to the upside. We've also got a squeeze on the NASDAQ. So I think, things are just kind of too uncertain here. So yeah, I think that's probably the safest thing to do. If you had that credit spread, close it, take a small profit, and then what I will be looking for is keying off of this 21 EMA, this prior swing low here on the S&P, so 2820, let's call it. And so if we look at that on the SPY, it starts breaking on a closing basis as 21.81. Probably look to do a put debit spread or a butterfly or something for a target down to 280 for this week. That's going to be kind of the game plan. I think that's probably makes good sense. So you've got a pretty good little area here. You could do, a really tight put debit spread. I think that's something to consider. So if we get a closing price where we're going into the closing below this 281.5, 281. Be looking for 280 as the next target based on all that open interest. And let's see what we could come up with there. So we start getting on a closing basis. So you know how often we'll get a market that opens up early in the morning, it's down for the first half, and then the tendency is to take it back up in the afternoon. That's been kind of the play. But into a closing basis, if we start looking at a close below this prior day's low here, around 280, call it 281.5, then there are two different trades to look at doing. One would be to do for this week's expiration, do a butterfly for the 280 pin. So I'd probably come out here and do a let's make sure there's no dividend distribution for SPY this week. And doesn't look like there is. Not seeing anything. If anybody sees anything different on a dividend distribution, let me know. Doesn't look like it, because you don't want to be short calls during a week of a dividend distribution. So that's the reason you need to check. But you could do a put butterfly. I was thinking of an iron butterfly. So let's say this starts breaking below here. You could come out and you could do a put butterfly. You could do just $1 wide or $1.50 wide. So you could do a 281.5, 280. So this would be one trade idea if it starts to break on a closing basis, and then 280. And then balance to 78.5. So real low risk trade, but if this starts breaking down, this will probably be 10 or 15 cents, and then that would be the target. So it has potential for big return. $1.50 wide spread, so it's just the difference between your debit and that. So that would be one trade setup that I would look to, and then the other would just be for bigger follow through, just looking at doing a put debit spread for probably next week's expiration. Let's go out and look. So I'd look for next week's expiration. I'd probably do something like starts breaking here. I'd buy probably the 281. Be super cheap. Let me get the right option series. So it'd be for next week. So come out to probably this series here, the August 24 series, and look to something like buying the 281.5 or 281, and then selling, be a target down here to 280, maybe 279. So probably buy the 281, sell at 79 or 78, something like that. Usually the markets, if they break here, this is going to be a support level, but you've got the 50 simple here, so probably do the 281 279 or 278.5, something like that. Really cheap trade, but could have potential for big reward. So that would be probably the go-to additional trade if you wanted. Okay, so always have your kind of a trading game plan mapped out for certain events when they do happen or if they do happen. So those would be two trades to look at. Okay. On SPX, I would give it till the end of the day to assess it then. You see SPY here broke up above this opening range. Let's see if it pulls back at all. It's holding steady in here though. Can everybody hear me okay? Mic test, mic test. Yeah, okay, thank you. Yeah, so SPX, I would just probably close it out. It's probably not worth it here. It's back to about a break even. Okay, so just take a look there. And could always reset it as well. Right now, getting out now, you have no worries. And then the backup plan would be to, establish a put spread, et cetera, on a break of this level here on the SPY. Or you could do it SPX too. It wouldn't really make a difference. It's just a matter of the contract size. So SPX is 10 times the SPY. So if you did 10 SPY contracts, that'd be the equivalent to like one SPX contract. All right. Okay, is there anything specific anybody would like to look at here? It's actually kind of a pretty quiet day. And again, this can be fairly typical for an August. You've got most of Europe on holiday, so you've got a thinner market. Okay, let's take a look at Microsoft, CNC. All right, implied volatility crush on NVIDIA. We can look at that. That'll be the 16th, so a few days off. Yep, seasonal, I'll get that updated, sorry. I don't have any seasonal plays right now that I'm seeing. Hmm. Damn it. So if we look at NVIDIA just over its past history, it tends to move about, you know, you can see it has some pretty big moves. So to sell implied volatility on this for a volatility collapse is going to be probably not the best trade. So what I like to do is look at past performance to see what it did. So you can see that in May closed down 5.6. Before that it was up around 7%, 5%, 5%. So this is kind of a normal within the expected range. But then you had this outlier here. That would have been a loser if you try to sell implied volatility for the crush. That would have been a loser. Loser. That's a loser too. So it's not very consistent. So it's probably not one that I would look to do. And to sell implied volatility crush, you're selling premium. So if you sell premium and it spikes up against you up or down, then you're gonna, you lose on that trade. Okay. I don't know if that answers your question on NVIDIA, but I don't see a way to play that right now. I mean, you could, go ahead and do that trade, but that doesn't mean you're going to have a successful trade. So implied volatility is actually already starting to come off some, but if this thing was to the expected move is around 5-6%, and if it gets bigger than that, you're going to have a losing trade on your account. Okay, so I don't, based on that inconsistency, I don't see a trade there. I mean, that doesn't mean you can't do it. But to do that trade, here's what you'd be doing. You'd be looking to sell some kind of a credit spread where you're receiving premium. Okay, so we look at NVIDIA, and its earnings are actually the 16th, I believe. So you'd be, so that's Thursday. So you can see 73% implied volatility. The norm's about 36, so it's about double. So you'd want to come out and sell premium, but if it was to spike 15-20%, then you're going to have a losing trade on that kind of premium setup. Expected move is about 6% up or down. And if you looked here, here's the expected move, 6% up or down. All right, so you'd be selling at 276 or greater, or 244 or greater. Okay, so you just come in here to see, what's that premium. And this is not until Thursday, so this will be different. But if you're looking at it today, There's not a 2, it's 276. So you'd have to look at the 277.5 probably. So see, right at the expected move, you're getting 43 cents credit. And that's the expected move. I wouldn't want to be that close. It's just cutting it too close. And so to get, this thing tends to have, it could have a 15 or 20% move. And the problem is if you try to do something 15 or 20% out of the money, there's no premium. So just taking a look at, we try to do 15% out of the money. That'd be about $300 call you'd be selling. Can you get any premium? Probably not. So see, that's the problem. So you want to try to find something that's consistent. If this was a consistent where it didn't tend to exceed the expected move, then you could do the implied volatility crush type trade setup. Yeah, you want it to be inside that expected move, because if it tends to go outside, then you're going to have a losing trade if you do that strategy. Okay. Yeah, on Visa I was waiting and I was watching that fib level. Okay, so pick out a key support level and use that. So just look for key support, which could be based on a moving average support, could be based on a combination of a alignment confluence of support. So here's a 618 right here. That's to me very important, and that's also, you can see the 8 exponential moving average. So that is a key support level. Now then start watching your lower time frames to see if the momentum's building to the upside or downside, and then those will give you some clues. So right now this 140 is kind of the key, and then monitor the lower time frames for potential direction based on momentum. So we get our direction based on momentum. So we've got a 5-minute squeeze and kind of neutral. It looks like it could push up. Let's take a look at the 10-minute. Don't have 10-minute. Let's take a look at the 15-minute. So 15-minute squeeze. So this is good. If hopefully it would trigger to the upside, then this thing would get going. That's what we'd like to have happen. It's got a 20-minute squeeze. So the key one will be watching that 5-minute, the lower time frame, and watching that today on the close more so. So it's fairly kind of neutral. I mean, it is negative, but it's really doing nothing. So be watching this based on this support level here, this 140. And preferably, to make it easier, I'd like to see this trigger to the upside. Now, if it starts triggering to the downside, then that's definitely, you'd want to hedge. Okay, so let's look at IDXX. Sure. Oh yeah, you had this. You did have this 5-minute squeeze triggered, didn't you? And now it's in another one, so it just can't make up its mind right now. You can kind of see that with everything today. So, excuse me, sorry. You have a long call. Um, what expiration? STX? Well, STX, the defensive measure is, I mean, the defense was to do that butterfly very cheap. So the butterfly was put on for 13-cent debit. So that's your risk. So, I mean, we can look at that. You know, it's just such a small trade to do any kind of defense on it. I mean, the whole defense is, the whole reason for the trade was it was cheap. You know, when you're risking $13 to make 40, 50, 60, then that's the risk reward you look at, you know. So, I mean, if $13 is too much risk, then, you know, you just, if you start doing defensive actions against a $13 risk, you probably end up making a bigger mess of things, you know. So if you're long a call here, you know, again, go down to your lower time frames, but you can see it's got a 4-hour squeeze. Let's drop down to the 30-minute time frame. 5-minute time frame, nice push up above the opening range, so that looks good. Okay. Well, then if your fly's wider, then keep, you know, use your 50%. We'll take a look at it. I don't use a 50% stop loss, something like that. So if you're, yeah, we'll take a look at it. So yeah, this looks pretty good. So if you're long a call, I don't know where the call is or what expiration, but that looks good. Now, if you're in the money on the call, you know, you could sell another money call against it to convert it to a call debit spread. Okay, so let's say you're long the 240 strike or the 241 or the 242. If you're long something right in here, then you could sell something outside above it, $5, $10 out of the money, convert your long call into a call debit spread, reducing your risk by the credit you would bring in on the call side. Okay, so that's something that you could do. Does that make sense? So if that's of interest to you. So if you have any more information, let me know and I could kind of give you some ideas there on if you wanted to convert it. But that looks pretty good. You know, it broke the opening range here. And if we look at, okay, so 241, so you're looking good. Now, what option series? Yeah, it looks pretty good. That looks like a pretty decent setup. I like the looks of that. You can see it's coming back to that 618, gets above that. It's got a good potential to get back up to that prior high. So, you know, if you're long the 241, that looks good. You could stay long that 241, but if you wanted to reduce your risk, you could do a lot of different things. Again, you could sell the, you know, you could sell it, pull up the option chain. What option series are you in? So September. It's only got the monthly. So if you're in the September and you're long the 241, well, let's see, they don't have a 241. Okay, so you must have the 240 strike long. Okay. Anyway, so you could sell, if you had the 240 long, then, you could sell the 250 against it, reduce your trade. You'd probably have the monthly on. So let's say you're long the 240, and I'm not sure where you got in, but you could easily reduce that risk by selling the 250 strike against it or the 260 and bring in credit, and then you have a call debit spread and you've got a nice trade set up. Okay, so a couple things you could do that. Okay, 240. So yeah, you could then sell a 250 against it, 260, a lot of different things. So probably, your target price is up here at about 252. So you could sell the 250 if you want to convert it to a call debit spread. That would be one thing you could do. Let's take a look here at how do you choose to do a balanced butterfly or a ratio butterfly? Good question. So basically, if you think that, if you've got a target, you think that there's potential that it could blow through that target. So if you've got a target, for your butterfly, and, for example, here, IDXX, let's say you have a target here to 247, so you want to do a butterfly, but, it's got this volatility squeeze. So whenever you have a volatility squeeze, that's one thing that can make you look to say, okay, well, if this triggers, it could have an explosive move up. So when I see a volatility squeeze, rather than doing a balanced butterfly, that's when I would look to do a put ratio butterfly. So if it blows through your target, so let's say it was 247, since it's in a volatility squeeze, it could get a big trigger, right? Could have very big move. So instead of doing a balanced put butterfly here or a balanced call butterfly, you do a put ratio butterfly in case it goes through your target strike on a trigger out of that volatility squeeze. So that's one of the rules that I like to follow. So if there's a volatility squeeze and you're close to your target price, then don't do a balanced butterfly because it could blow right through it. Do a ratio butterfly. Okay? And then we had a nice setup the other day, last week on Nike, and it's still performing quite well. And converted this to a butterfly for this week's expiration, so that's looking really good. Yeah, it looks real good. So we had the original trade, the 78.581, and then had some good profit in it, and then converted part of it to, if you wanted to a butterfly, and basically have a free trade now. So last week when it shot up to had that really nice spike up in here on the 9th, sold the 81, 83.5 bear call credit spread, brought in, this was up to over $1 credit. So basically you can see it offsets the $85 debit. So now there's no risk to the downside or upside. Actually have a small credit. So right here it's looking really good. You can see today's date. This is up based on this setup spread 147. Now, so now the target's is 81 right here. So if that happens on Friday, this thing has some pretty big potential. So let's take a look at Thursday. If it's trading right here, this will be up 170. Friday, coming in Friday, if it's trading right here, this will be up 188, and potential for a $250 profit on that. So that's the trade setup there. And then a couple others that you wanted to look at. Take a look at DK. Okay. STX. Let's take a look at STX. STX. Okay. Wow. Blew right through that 200. So this, this one is the whole reason for this trade again was to set it up as a butterfly, and the debit paid was going to be your risk, which would be like your stop loss. So I mean, there's no defense for this right now. It's just blown through this level, so you have to, take your risk as what you paid on the debit. That's it. So I had the dollar-wide spread to keep it real low risk, and that was $13, and now it's, it'll be a $13 loss unless it comes back down to 50 by Friday. So you want to make sure you close out your bull put credit spread side though, because it's going to be in the money, so you won't get exercised. So that would be one thing you want to be aware of. And then let's take a look at DK. Yeah, it looks pretty good. Their short side trade set up. Yep. Got support right here. So coming into support right here, 618, and then down here. So not that much potential downside. This was one, if you were to do this, go out, probably a month out. I don't really know what this company is. But definitely has potential for move down to 48.79. Then down here is good support, 47.66. Probably probably want to go out to at least the September monthly and look at the you look at either the 50, 45 put spread. You can see the expected move here is for about $4.76 down. So call it 5. So potential target down to 44, right there to 45. So you could do a $5 wide put spread. Something like that. Or you could even make it a little bit further out of the money. And you could look at be cheaper. You could do a little bit out of the money. You could do the 47.5, $2.50 wide spread there for pretty cheap, $65. Nice positive risk ratio there. That'd probably be the one that looks the most interesting, because you would have very low risk and keep your stop loss at, say, 60% of that debit. And then you've got potential downside if it hits your target down here, 48, or if it goes lower, let's say it goes to 47, this would have a nice, very nice payoff. So that would probably be one that looks pretty good there. Excuse me. Okay, so that's DK. It's coming into this kind of support. You can kind of just eyeball and see where the price action is. You can see that area there. It's got a lot of support through there. So, a lot of support through there. And then the other one, let's take a look. Pam, you wanted to look at I'm looking back here. CNC and CBRE. Let's take a look at those. Nice, nice pop there. Nothing to do here right now. Unless you're in it. That's a beautiful move, though. Wow. Yeah, it's gone through all your fib levels. So, just put a trailing stop. Use something like you could use a 4-hour time frame. Well, if you're trying to find an entry, go and use the opening range breakout indicator, okay? So if you want to try to find an entry into any kind of trend that's already exploded, this is the best way to do it, is use your opening range indicator. Okay, so you'd come here and you look at, this will give you about as good of entry into a trend as you can ask for, So you're playing the momentum to get back into that trend. So you can see today broke this opening range, spiked up. I'd like to try to fade it, the first break, and here you can see that it pulls back and then it starts going. So this would be one way that you could get into something that takes off. that's, yeah, beautiful looking chart. And if you were in this, you could use a trailing stop. You could use like this 4 hour, like a close back below 140 could be your trailing stop. So nice breakout there. On this one, it's had a big move and it's down to the 200-day. I would not be shorting this one anymore right here. This is going to be support. Now it could go right through it, but would not want to be shorting it there. You can see it had a volatility triggered on the daily right there. Had a nice break to the downside. You can see your trend line break here. So the big meat of the move. Now if it breaks this 200, then the next target will be right here, 45, and then to that spike low. All right, so let's see. What else? Anything else here? Let's take a look. That the one, the IDXX. I don't know what that is, but that looks pretty good. That was one that's out of the ones that we've looked at today. This looks pretty interesting. I don't know much about the company though, but this is worth looking at, putting on the watch list. This looks pretty decent. You can see it's got a volatility squeeze here on the daily and the 4 hour. And earnings are gone, so this looks pretty good. I want to check out the company though, but let's see. Looks pretty good. Very low volume though, isn't it? Not a lot of volume. Veterinarian medicine company, cool. All right. I originally wanted to be a veterinarian. That was kind of the career path I wanted to take when I got out of high school. Yeah, you can you can see here. The spreads are super wide. See that? Very thin. Not the easiest one to trade, but that looks pretty good. Alrighty. Well, we'll call it a day here, but markets are just, they're back and forth, stabilize, pulls down, goes up. So you just have to be very quick and proactive. But now Visa's looking good, looking good here. And, SPX turned around. So I guess in summary, to close out the SPX bear call credit spread if you had that. And yeah, the option volume is very low on IDXX, so that was the negative about it. Yeah, so I'd like to get him into data mining. That he likes that data mining. He likes that. So Visa's starting to look good here again. It needed, like we talked about, hold that fib level at 140. So far, so good. So it's been holding that. So potential to get going here. And then SPX, the bear call credit spread, close that out. And it's starting to stabilize here. And that's about it. So we'll get this posted as soon as I can, and then I'll see a bunch of you back here for the close today. All right, have a good one.